So today I thought I'd do something a little different than our normal chat. And the reason for that is we're coming into summer, and I've always thought that summer is a terrific time to go back and read those books and articles, websites, blogs, whatever it is that you've been doing to learn more about the markets. The learning never ends, for sure. I mean, if you look at even the most experienced, successful trader, they're always learning because the markets are always presenting us with different challenges, new behaviors. Price action is price action, yes, but the psychology that moves the market often has a different tone, a different attitude. I mean, that seems to be, obviously, I think the common denominator. The common denominator with the traders that I know, they understand that they're trading psychology. Excuse me. I'm having a bit of a sneezing fit here. Okay, so if great traders know psychology, then I think that understanding our own and understanding the market psychology is key to our success. So I was thinking about psychology, and I was looking at some of the writing that I do all over the web, and looking at the blogs that I contribute to, and my own personal blog, and the Daily Forex Trading Edge blog. And I was thinking, it'd be really nice to let people in on my psychology, the way that I trade the market, because without that, there's no way for traders to kind of, decode, if you will, my secret language. I find that a lot of traders will ask me, I understand what you're trying to tell me, but Raghee, sometimes you have a little language of your own. And that's absolutely correct. When I look at any one of the updates that I write, sometimes I do have a language of my own, a little secret language. And I thought, why not talk about that and then also describe what it is and why I use it. And in this way, this would be a great kind of foundational video that you can refer to. And at the same time, I'm going to share with you, I think, some of the keys to my analysis. So let's go ahead and do that. Again, I thought it'd be a good way to kind of kick off the summer. So let's jump on over to the charts, and we'll go through the secret language, if you will, basically word by word, and we'll talk about the current market as well. So we're looking at my quad layout on the MT4 platform. Got my favorite indicators running, my MACD histogram, 21-3-1 stochastic, 20 period CCI. I've got the automated chart patterns running here on the lower right hand chart, and of course all the charts have the 34 EMA wave and grab candles. So let's start with those two words first. Those are both plugins that I run on all my charts. The 34 EMA wave is a tool that I use. It's made up of a trio of moving averages. It's made up of 3 34 period exponential moving averages, one on the high, one on the low, and one on the close. Now these 3 34 period moving averages are based upon the Fibonacci number of 34. Okay, and they help me determine a number of things in the market. Dynamic support and resistance. They help me determine the market trend or the market phase. Okay, that's another one of my words. We'll talk about that in a second. One way that I've visually helped myself to recognize what the wave is indicating regarding the sentiment and momentum and trend of the market is to color code the candles, which I call GRAB, G-R-A-B, green, red, and blue. That's what GRAB stands for. So a GRAB candle essentially uses the 34 EMA wave as a line in the sand, if you will, and allows me to gauge the sentiment and momentum of any time frame, any pair. And basically what I do is I look at the colors to determine weakness, strength, or neutral. So when the market is weak, the grab candles paint red. And all that means is the close is below the 34 period low. When you see the grab candles painting green, all that means is that the candles have closed above the 34 period high. Okay? So you can see here, these are closes above the 34 period EMA on the high. When we go blue, okay, that's a neutral. Okay, and that lets me know the market doesn't have a dominant directional bias. There's another one of my words. We'll talk about that in a moment. And that's when we'll see the grab candles paint blue. Now, I still differentiate between up and down closes. An up close is a lighter shade of whatever the color is, green, red, or blue, and a darker shade is a down close. So I'm still keeping that traditional Japanese candlestick shading. I'm just giving that extra layer of the color coding according to the 34 EMA wave and how prices are behaving around the 34 EMA high and the 34 EMA on the low. So that's the 34 EMA wave and grab candles. Now both these plugins, by the way, there's nothing really proprietary about them. I've told you why they do what they do and what levels at which they change, and you can actually download these indicators for free in one of two places. You can download them from, let me give you both the URLs here. You can download them from my personal blog, or here's a better one of the two, because it's a self-installing one. Download them from ibfx.com/tools/grab. And there's a video there, an explanation as well. So these are free downloads available for your MT4 platform. So I talked about market trend, market phase, and then I mentioned directional bias. Let's talk about those. Now, market trends or market phases are 100% influenced from Dow theory, Charles Dow, and how he talked about the way the stock market behaves and how the market psychology could be categorized into one of four phases or trends. Mark up, which is an uptrend; mark down, which is a downtrend; accumulation, which is a sideways narrow channel, I should say; and then distribution, which is a much more volatile sideways channel. Now, of course, he was talking about the stock market, and the stock market has a natural bullish directional bias. In other words, people are always looking for the market. Majority of people are looking for them to go up, so everything is kind of geared towards the uptrend and so forth. And therefore, distribution is typically described to be found at the top of an uptrend, while accumulation is that sideways narrow consolidation that precedes an uptrend. But we all know that in Forex pairs, there's always a bullish side of it. So you'll often hear me talk about distribution at the bottom of a trend. But think about it for a moment. If we have distribution at the bottom of a trend, one half of the pair is in the more classic definition of distribution at the top of its trend. So don't get caught up on where the volatile sideways market is occurring. Just understand the psychology of it, which is confusion. The accumulation could be boredom or waiting on something, okay, or uncertainty even, okay. Confusion is very different to me than uncertainty. When I'm not certain, I'm likely to kind of wait, or do as Jesse Livermore said, sit on my hands. I'm not going to really do much. Confusion is almost like, in my mind, the visual that comes up is a rat in a maze, just constantly trying something else, moving somewhere else, moving, moving, moving. There's action being taken, but the action doesn't seem to last very long. It exhausts. So sprint in one direction and stop. Sprint in one direction and stop. Turn around a lot. So confusion. So that's what is the hallmark to me of that distribution. And markup, markdown, as I mentioned, uptrends and downtrends. Those are the market trends and market phases. 100% Dow theory. This is probably the single most important aspect to my interpretation of the markets. Okay? That's what psychology is. So when I talk about psychology, or the dominant psychology, that brings us to directional bias. And that is taken 100% from the daily time frame. Okay? So if I were to go to, let's say, take a look at the Aussie US dollar. And if there is a pair that you want to look at as we're going through these, my secret language here, just let me know. Okay? And I'll be more than happy to take a look at that. And we'll continue on with our discussion of these terms. So here's a chart, by the way, that could be considered going into distribution. One thing you'll notice, by the way, about the grab candles is notice how we have a rapid succession of red, blue, green, confusion, right? Sentiment, momentum are shifting rather rapidly versus the uptrend where we have the 34 EMA wave moving nice at a clear clock angle, in this case a 12 to 2 o'clock clock angle, indicating that markup or uptrend. Okay? Solid green grab candles, bullish momentum, bullish sentiment, right? If we have enough bullish momentum and sentiment, at some point it pulls up the wave and we end up with the uptrend. That's kind of my formula to a trend, if you will, and that is sentiment, which I'm measuring from the grab candles, plus momentum, which I'm also measuring from the grab candles, equals trend, which I measure with the 34 EMA wave. Okay? Now, directional bias is taken, like I said, from the daily, and we use the grab and we use the 34 EMA wave to determine if there is a trend, some sort of trend, that we can clearly identify on the daily. The daily, to me, being the most psychologically relevant time frame. Now, for me, I don't necessarily say, I'm not trying to say that the daily will be the most tradable time frame. It's just the one that I want to respect because it's probably the best reflection of the overall psychology of that market, whether it be futures, forex, or stocks. Okay? So, right now, if I were to call the directional bias on this based upon the daily look at this Aussie US dollar, I'd have to say that it's a non-trending directional bias. It's a 12 to 2 o'clock market phase, and overall we're talking about confusion. Now, when our daily time frame does not have a clear directional bias, one of the things that you can consider is simply not trading that pair, because when there is not an overall bullish or bearish psychology, when the daily chart is not in a trend, I do believe the trading to be a little bit more challenging. Because why? Especially in distribution. Distribution presents what challenge? That confusion, right? Accumulation, or that sideways consolidation, presents a challenge too, because the range is so narrow. So trending markets, when the daily chart is trending, I feel the trading is easier. I shouldn't use the word easy, but the reason I'm saying that is because I think the psychology is more clear. The dominant psychology, or the directional bias, indicates that there will be more support on pullbacks, and there'll be likely a push for higher highs within the context of an uptrend on the daily, and that there'll be more resistance at ceilings, and there'll be selling pressure waiting there, and a push for lower lows when the dominant psychology or the directional bias is in a downtrend. So understanding that's very, very important. Okay, so we're basically taking a clock angle reading that 12 to 2 or 4 to 6 is ideal for, I think, better clarity, better market clarity, market psychology clarity in terms of our intraday trading. Even our end-of-day trading, but I think the intraday trading is easier when there's a clear trend on the daily. Okay, I mentioned the word clarity. Clarity is another one of those. And when I talk about clarity, I mean, obviously clarity is a term that most people understand, but when I talk about clarity, I'm specifically talking about the 34 EMA wave and the 3 criteria that I have for clarity as it applies to the wave. And that is, if I have a clear clock angle, 12 to 2, 4 to 6, or even 3 o'clock, okay? I'm going to ask myself a few things. One, are the moving averages of the 34 EMA wave smooth? That reflects a certain amount of price organization and lack of noise. Are the 3 lines of the moving averages, the three moving average lines, the 3 lines of the 34 EMA wave, are they heading in that direction? Are they established? Have they been moving in that direction for a while? Or is it transitional? Is it a fresh transition to a certain market trend or phase? How long has it been moving in that direction? That's what established means. And finally, and this only applies to trending 12 to 2 or 4 to 6, only to trending clock angles, again, 12 to 2 or 4 to 6, and that is, are the lines of the moving average respected? So if we have a pullback, are prices respecting the 3 lines of the moving average? Take a look at this section here. On pullbacks, 12 to 2 o'clock angle, green grab candles. Notice how we're bouncing off the wave. That's respect. Okay, so are they respected? That only applies to trending markets. Okay. All right. So we've gone over a number of terms already: the 34 EMA wave, grab candles, the market trend or market phase, clock angles, directional bias, dominant psychology, and clarity. Okay? So those are just a few, about half of the terms that I tend to use, and I think it's really important that I define these things because they mean something, as we've been discussing. I think it's very important that you understand this secret language of mine, because every one of them reflects some sort of opinion that I have about the market, or they help me determine that opinion I have about the market. Okay? Let me mention another term, and this one's an important one, and it applies to any market, as do all these terms, and that's psychological levels. You hear me talk about major and minor psychological levels quite a bit. And those are basically prices that, due to the fact that they are whole round numbers, especially the 00, they will have their own value in terms of support or resistance because of the way, the reason I call them psychological numbers is because of the way we tend to see orders gather up in an area on a particular price. Because if we were all going to go meet for lunch after this session, would we meet for lunch at 12 o'clock or 12:17? Likely 12 o'clock. Okay? We celebrate 50th wedding anniversaries, 20th wedding anniversaries. Why? Is that 50th any more or less important than the 49th or 51st? Or we celebrate 50th birthdays. Is it any more or less impressive than reaching the 49th or 51st birthday? Not necessarily. Okay, what it is it's a whole round number. 100. Is $100 really that much different than $99 or $101? It's just we love these whole round numbers. We tend to have a psychological reaction to them. And therefore, the way we put in prices in the market when we're trading reflect that. So the 00s, extremely important support or resistance. If we're coming up at a 00 from below, that is absolutely a resistance level we're going to contend with. If we're coming down towards it, it's going to be support. Let's talk about the support of the 80 00 level, also a decade level, 80, and the dollar-yen. We've been bouncing off this level on and off for some time. Okay, I'm not even completely convinced we're going to accelerate through it yet. We've finally broken it. There's a certain amount of importance to breaking a psychological level, because if we're able to break it, we might see momentum accelerate as we do break it. Okay? If we see it bounce off that level, that means there's plenty of support waiting there at that double zero. There's plenty of buyers that put in those orders to support that level at 80. If we don't accelerate, we may not have the psychological reaction that we're looking for. So looking at the way prices behave at any decision level, any support or resistance level is important. I think it's even more so at double zeros. 50 levels are also major psychological levels, the double zero and the 50 pip. Minor levels are the 20 and the 80. And just, I think if you observe the way price action moves, you'll notice that those four levels, the double zeros, the 50s, the 20, and the 80s, seem to have a certain amount of support resistance just built in to the importance of being that whole round number. Okay? All right, so I've gone through quite a few of these terms that I use, and hopefully when you're reading my analysis in any number of places that you will have more familiarity and understand a little bit better, to a better degree, what it is that I'm referring to. Of course, if you have any questions, you can always leave a comment at the blog, and I'll be more than happy to help out. And we'll probably go ahead and finish off the rest of my secret language next time we meet. So thank you as always for your time. I hope this gives you a little insight into the inner workings of my mind. So when you're reading my analysis, you get a little bit more out of it. So thanks as always, and I'll see you in the next video.